Well, the attendee number is slowly rising, but we'll go ahead and get started. Thank you again for joining us tonight. My name is Ben Rhodes, the Senior Vice President of CAMS. We have with us tonight Nute Thompson, Hope Carmichael, and Andrew Bateman. They're going to be talking with us about when disaster strikes and how to pay for it. So with the start of hurricane season coming up real soon, we felt this was an applicable topic to get ready for, hopefully, knock on wood, no disasters this year. But if one does happen, we want to help everybody be prepared. As a reminder, we are recording these sessions and we do post them on the camsmgt.com website. They're under the board member section. You can click on the webinar link. We do have approximately 25 other webinars hosted there, and you can certainly review some of our past presentations. Additionally, we will be taking questions at the end of this session, so you can use the Q&A option. So Q&A at the bottom of the screen, and feel free to type your questions and I will help facilitate those questions at the end. So Hope, Andrew, Nute, I will turn it over to you.
Great, thank you so much, Ben. And I'm going to go ahead, and I was nominated to drive the train here. So hopefully that's everybody is seeing this PowerPoint. And I'm Hope Carmichael. I'm an attorney in Raleigh, North Carolina. And I have been specializing my practice in the representation of community associations and condominiums for 31 years. And we have 16 attorneys in our firm. It's a large part of what at least half of the attorneys in our firm do. And we practice all over the state. But Nute Thompson, my colleague, that I'll let introduce himself, joined us more recently, is also licensed in South Carolina. So Nute, if you'll introduce yourself, and then we'll throw it to Andrew.
Yeah, thank you, Hope. And good afternoon, everybody. Like Hope said, I'm an associate here at Jordan Price in Raleigh, and licensed in both North and South Carolina. Practice generally in the community association area, and work very closely with Hope and the other attorneys here as various community association needs arise, and we try to help them out there. With that being said, Andrew, I'll let you make your introductions.
Why, thank you. I'm Andrew Bateman. I'm with TriSure. I'm an independent commercial insurance agent, but what does make me different or special, however you'd like to look at it, is I am a community insurance and risk management specialist. I focus my practice into working with only HOAs, townhomes with property, townhomes without property, and condominiums.
Thanks, Andrew. And Andrew is very special. I can attest to that. So fires, floods, and failures. And I note that the title of our presentation today is not when disaster strikes, but that disaster strikes and how are you going to pay for it. So Ben, I appreciate the hopeful words. We certainly hope we're not going to have a major hurricane season this year, but there are all kinds of disasters. And we know from experience that things are going to happen, and your volunteer HOA board is going to be left with some heavy responsibility when that does happen. So we really want to give you some proactive advice today. Some of what we're going to talk about is of necessity reactive. But we really hope that you pay attention to that proactive, preventative advice to get yourself in good shape, because we know we live in Hurricane Alley. We know things might happen. It's your fiduciary responsibility as board members to anticipate and be ready for these kinds of things. And as I am fond of saying, it's like an insurance policy. I'm sure Andrew will thank me for saying that. So because it is timely, because of course hurricane season is coming up. So Andrew is going to be key to this presentation in understanding the insurance you have and the insurance you need. I am really going to be focused. A lot of my practice area is heading up is in assessment, kind of helping associations figure out creative ways, working with you on loans and how to appropriately pass a special assessment, how to structure assessments, make sure that's collectible from your owners if you need a special assessment. And Nute is going to talk to us about what in the world happens when you're in a 30-year-old condominium and you have some destruction and you have to rebuild, and all of a sudden you're hit with completely different building code requirements than when your community was constructed. One thing, I don't know that there's a bullet point, but I want to say this, it's appropriate because CAMS is sponsoring this for all of you. The most important, please call us, please call Andrew, but before you call either one of us, call your community manager, because the fact that you have a community manager who is putting on this kind of educational seminar for you should tell you a lot about the fact that they know that you need to be prepared for this. So they're your first and best resource to get to some of this more specific information. Know your governing documents before you engage in the renewal of your insurance every year. And Andrew, why don't you talk to everybody about why that's important?
The biggest thing in regards to the governing documents in your insurance section, it is absolutely crucial to have those insurance requirements in these governing documents in your covenants to be clear and concise, because insurance is just the vehicle that is going to respond to the damage that happened. But the governing documents is the written contract that the insurance must follow. If it is not clear, then the insurance is not going to respond clearly. So this is one of the number one things that I would recommend you get done first.
And when we say know your governing documents, certainly in a condominium, you're going to have some more probably complicated provisions, whether you're in North or South Carolina, regarding what your insurance requirements are. Many times we see in townhome communities that there are rather detailed insurance provisions. And guess what? If you have detailed insurance provisions in your covenants in a townhome community, that's even more important than if you're in a condo, because in North Carolina, we have the Condominium Act, Chapter 47C, which really gives a lot of statutory guidance to the parameters of your insurance and what is required. But we don't have the same thing in the Planned Community Act for townhomes. So what's in the covenants is going to be really important. And Nute, why don't you talk to us about South Carolina in that regard?
Yeah, unlike North Carolina, irrespective of the nature of the units, there's no condominium act, so to speak. There's a horizontal property act in South Carolina, which functions in the same way in many respects. But the insurance provisions of that title, it's Title 27, Chapter 9. The insurance provisions of that statute in particular are not very specific. They only require that the association carry insurance, and that insurance policy the association carries can have no negative implications on the unit owner's insurance. Those are the only statutory requirements in South Carolina. So it's much more of a, like we like to say, wild, wild west in that regard.
So Andrew, now that we've kind of set up why it's important to understand what your covenants say, this before the storm on this slide is really representative of whatever the storm may be. This would be true to understand your casualty insurance, whether we're talking about, certainly if you're on the coast, and I know many of CAMS communities are, but hurricanes we know can affect inland areas of North Carolina just as much as the coastal areas, but predominantly on the coast. But we're also talking about the storm of the figurative storm of fire or other kinds of tornado, other kinds of damage. So Andrew, talk to us about the mechanics of insurance and what do you mean by riders and exclusions?
Understood. And today, of course, we're only talking about the property policy for an association. Most important, of course, is, and we're going to get into each of these in detail later into this presentation, but I just want to go through, make sure that you have replacement cost as opposed to actual cash value. Replacement cost gets the building rebuilt at today's dollars. Actual cash value takes into account depreciation. So you will not get the full dollars needed to replace the damage to the building. A lot of times you'll see it where buildings have 15 or 20-year-old roofs or older. The insurance company will put ACV or actual cash value only on the roofs. So if there's any damage to the roof for wind, hail, hurricane, anything that happens to that roof, it will only be replaced at actual cash value. If there was a fire, the building would be replaced at replacement cost. The insurance companies have that ability to attach actual cash value to different parts of the building. You want to make sure or understand if you have co-insurance on the policy or agreed value. Well, co-insurance is one of the most understood parts of an insurance policy. Co-insurance is a penalty put on by the insurance company at time of claim. At time of claim, the adjuster comes out and determines the full replacement cost of that building. If you are not within a certain percentage of that replacement cost at the day of the damage, and the normal co-insurance is usually 80%, 90% is worse, and 100% is even the worst. What that means is you have to be within 80% of the replacement cost. If you are less than 80% insured to value, then the insurance company will place a penalty and you will be paid less of a claim, because in the insurance company's eyes, they were insuring a building and not getting the correct premium for it.
You're scaring me to death, Andrew. You're scaring me to death. So be sure you tell everybody why you're scaring us to death, how you, I mean, I'm just thinking, because I'm the lawyer advising the volunteer homeowners, how in the world does everybody supposed to remember this and avoid these traps?
Well, it's my answer is always that if you have a knee problem, you're going to go to an orthopedist. You're not going to go to a generalist for it. You need to make sure that you are meeting with your agent on a regular basis and make sure your agent is experienced. I mean, those are the things, is that as an agent, we get paid. We get paid. We'll just leave it at that. So we don't charge extra to come to board meetings. Have your agent participate. We don't always have to come to the meeting. We talked about this earlier. Zoom is a great way for your agent to participate, but put them in front of you. Does your agent have confidence meeting with the board? Do they know what they're talking about? But real quick, back to co-insurance. You want to make sure that in your policy, you have agreed value. Agreed value suspends co-insurance. And what this means is that the insurance company does basically agree with the replacement value. So it waives the co-insurance. So that's one of the most important things that you want in your policy. Real quick, ordinance or law coverage, water sewer backup. And remember, wind-driven rain is an exclusion on all policies. To get that coverage, you need it endorsed back onto the policy. So those are the most important things. There's so many more nuances to the property policy, but they're one of the most important.
So let me recap, because I learned that, let me just say, as an attorney and as a mentor for Nute, who's a younger attorney in our firm, I never answer insurance questions. I always say, let's get the agent in, because what Andrew's talking about right now is a specialty. And when you're talking about co-insurance, Andrew, and you're talking about agreed value, and you're talking about replacement cost versus actual cash value, those are terms that are written into the policy itself. But when you were talking about special coverage to avoid that exclusion, that's what you mean when you say a rider, just to break down basic insurance terms for everyone.
Yep. The riders and endorsements, is, I would say, are synonymous. And then exclusions. Wind-driven rain is an exclusion.
Okay.
It just needs to be added back as an endorsement to get the coverage.
But what I would say is, as an attorney, is understand that it's important to pay attention to the policy exclusion. So if you're talking to an agent, or you're talking to your community manager who is going and getting information from the agent for you, please say, what exclusions are there on this policy? So you understand the exclusions. Just because you have insurance, there's a whole lot of things that you're not going to get covered for, and you need to make an informed decision about whether you're going to add that coverage back. That's what we mean by being prepared and thinking about this now. You're not going to want to realize it after the disaster strikes. Yeah. What about, to explain this excess market? What does that mean, Andrew?
Well, if it's okay, I'm going to go back to replacement cost real quick, just because this is the most important thing for all board members that are on this phone call. Every year, a board member signs a statement of value attesting that the replacement costs are correct. I'm going to say that again. A board member is attesting that those replacement costs are correct. How do you know that they're correct? Where are you getting the data from on that replacement cost? Especially over these last few years, replacement costs have skyrocketed because of supply chain problems, material costs, everything that could go wrong, labor costs, everything is skyrocketing. The best way to get that replacement cost, and the most exact way to get that replacement cost, is have an insurance appraisal done by an engineer. We recommend that whoever is doing your reserve study, you have that engineer come back out because they're more familiar with your community. The second is your agent should be supplying you a replacement cost estimator. This is the insured to value report from CoreLogic. It's the insurance industry standard. But remember, it is only an estimate, but it is a valid part of the puzzle that you can use before you sign that statement of values. But it is an estimate from that agent. The other is just ask an engineer about the replacement cost, a builder. But you need to get as much information as you can, because it's not how much you bought or sold that unit for and how much it costs someone to swing a hammer and replace it and rebuild it. So there you go. Now to the next question. I apologize. Real quick.
Okay.
It's the illusion of choice that Nute, you did a great job with that term. I appreciate that very much. I'm going to start using that in my presentations. The illusion of choice is insurance is not a right. It's a privilege, and that privilege can go away from associations due to their loss history claims, and age of buildings makes it more difficult. Age of roofs, infrastructure, electrical, plumbing, everything that goes into the underwriting. When a standard market is one that is has the ability to do business in North Carolina, but is also backed by the North Carolina Insurance Commission, that if a standard market fails, North Carolina's insurance will step in and pay all claims due. Excess market is just the opposite. It has less coverages, more expensive. It is where associations have to go when they have had large claims, multiple claims, or their buildings are so old, their infrastructure has not been updated. But the excess market is not. They're licensed to do business in North Carolina, but they are not covered by the North Carolina insurance.
Talk to us about, is the same true of the Department of Insurance? I know you're licensed, Andrew, also in South Carolina.
It falls under the NCJUA, and South Carolina has this, it's different name, but it's the same organization. It is exactly true in South Carolina also.
And I know this just because we all, including your managers, belong to an industry group, Community Associations Institute. Andrew and I both hold designations of specialty within that group for what we do for our professions. And I understand, Andrew, that after the Surfside condominium collapse in Florida, that these insurability of older buildings with infrastructure issues is becoming tighter and tighter and more difficult. And so that's why I particularly wanted this bullet point on this presentation. You're going to, if you have not yet encountered problems with fitting within the standard market and being insurable within the standard market, we are going to see many, many more associations, in my opinion, fall into that category. Andrew, would you agree with that?
I couldn't agree more. You know, our first slide was in regards to Hurricane Florence. Hurricane Michael happened that year also in 2018. Florence caused $24 billion in damage. Michael was $25 billion in damage. These are all factors, plus the Surfside. What could go wrong did go wrong at Surfside. The insurance industry is tightening. The underlying underwriting requirements are going to get stricter. It is considered a hardening market, that where insurance companies used to be lining up to write the business for associations, they are jumping out of the market as fast as they can.
Not to scare anybody.
Yes, it's a happy-go-lucky presentation. Absolutely.
This is be prepared. So what happens when disaster strikes? Because you as board members are going to have to deal with it. So you've got insurance. You have paid attention to everything we've said and every bit of advice your community manager has given you, and you've got a great policy. So how do board members engage in the filing of the claim, Andrew? What's your advice there?
Again, I think it should always fall back on your agent to place the claim for you. The agent is, again, we have a duty to the association, not the insurance companies. When I'm as an independent insurance agent, I have a duty to the association, not to the insurance company. So when you file a claim, I think it should be through the agent, because, you know, as the next bullet says, whenever there's a claim, hopefully 95% of all claims go smoothly. Well, you need an advocate when the adjuster or the insurance company is not communicating with you, the claim's not moving fast enough. And at worst, let's say that there's differences in the amount of money offered by the insurance company to what estimates are for repair. You need an advocate battling for you. That is one of the most important things. As Ben Rhodes knows, I'll stand on a soapbox and I'll yell from the top of my lungs for my agent, for my associations. It's very important to have an advocate.
And Nute, I'm going to ask Nute to kind of we flipped the role here. The attorney's got the last bullet point, because Nute and I have been involved in some litigation, which it was not Hurricane Florence, Nute, it was Hurricane Matthew. There's some significant damage to a condominium on the North Carolina coast And it's kind of it is a case study in how to do everything wrong, how to have bad insurance, how to not pay attention to what happened after the storm and hire the right contractor. But one thing that Nute, I'm gonna let Nute talk about that a little bit. How should you deal with, contractors, and you got people coming, storm chasers, we call them, coming to you. And you just got to get somebody to put a tarp on the roof, right? And how do you or you've got to clean up from a flood, and you've got the restoration companies, calling and so forth. But this particular case that Nute's going to talk about, I want Andrew to talk about public adjusters. Public adjusters.
Public adjusters. Yep.
To explain what public adjusters are and the difference between what you're talking about the agent being your advocate versus hiring a public adjuster.
The public adjuster, right? The claim has happened. You've reached out to the insurance company and the process has started. You only have a few, it could be a day, couple days, week, to make a decision if you're going to hire a public adjuster who is in their role, how they're supposed to act is they are the advocate for the association, and they're going to be negotiating with the insurance company. The public adjuster is a licensed and certified person to be a public adjuster. The public adjuster will charge almost a flat rate of 10% of what the damages are. So the higher the damages, the higher the public adjuster gets paid. We have had public adjusters that have been awesome and worked out great. We have had public adjusters that have not worked out great. And it has led to lawsuits that Hope and Nute are going to talk about, but I have experienced also. So choosing a public adjuster, it would not be a bad idea to interview a public adjuster now, or at least have a contact at a public adjuster, just to have it as an interview. But if you do have an agent that is an advocate, that is on your side, that you meet with regularly and trust, well, it's not a replacement of a public adjuster by any means, but I would weigh it heavily in your decision of hiring a public adjuster.
And as an attorney, what I will just say about that is that's why it's important to make sure you have the right agent that you trust, that is part of their services to you, or to be your advocate, as opposed to an extra payment for wrangling and arguing with the insurance company, which may just end up delaying things to the point that you could care less whether you got that extra $10,000 or whatever usually they're much bigger numbers when you have a public adjuster involved. So just as the attorney, I just want everybody to understand there's a lot of chatter in the community association industry about public adjusters. And I think the best thing that you can do as a board is to get the right agent who knows what they're doing and hopefully helps you avoid the need for a public adjuster, or that the agent will tell you, we really need to bring in a public adjuster on this, and that you have that trust in that would be my independent advice on that. But Nute, speaking of the cautionary tale,
yes. So
let's talk about what not to do.
Yeah, as Hope kind of led in, and I hope has been made clear, having advocates and allies and relationships in place prior to these things happening is pretty critical. The first word in the work that we do, the community, is really critical in this part. Having, many of these places, particularly these beach communities where this litigation we're talking about is that, this is a large condominium. with many folks who may live out of town, or this is a vacation place for them, so this is not their primary residence, but they're still connected to the community vis-a-vis the fact that they go here regularly, or that they've had this place for many years. And so in some ways, not being from the area is going to be a large benefit in these cases. And thinking about this litigation in general, pulling, as a board member, pulling from your community the wealth of knowledge that they have, and avoiding these situations. So as Hope said, this is Hurricane Matthew. Matthew blows in. It's a near total damage situation, particularly to the upper units. And then I think even some of the middle units received substantial damage. I think it's 4 or 5 floors. In any event, a contractor, I believe, licensed in the state of Texas, certainly incorporated in the state of Texas, rolls into town. This is a North Carolina community. It rolls into town and says, "We're here to help. We can fix this." They have a contract, quote unquote. I think it's 2 pages, Hope, of a contract for a $14-15 million job. And the contract says, we're going to get paid for the work that we do. We'll work out the details later, more or less. That, of course, does not go to plan, as is the case, or else it wouldn't be the master class. But the failures started long before the hurricane got there. I don't think the board was attentive to their insurance policy. They certainly did not have connections, or were not plugged in with an adjuster. And at any rate, the contractor that came in sold them on a fairy tale, or at least was opportunistic with respect to the urgency that the board felt. And so now here we are, almost 3 years later, dealing with this litigation where not only was the association sued, but every unit owner who owned property at that time was named individually in that lawsuit, and liens were placed on their units for the amounts owed. And the liens were not for their pro rata share. Specifically, the liens of each asked for the full payment of the terms. So on paper, if you were a unit owner, you had a lien against your unit for millions of dollars. And in many cases, these units were not livable. They were not habitable at the time these liens were even placed. So because of the board's inattention, and because of the failures with respect to their insurance, they're now in a position where you've got to hire independent counsel, not just the board. These owners have to hire counsel to come and litigate these claims that really shouldn't have been there in the first place. I mean, I think everyone can agree there's no fault with respect to a hurricane coming through, but not having the right contractor in place, not specifying the scope of work on that contract, not having an attentive insurance agent leads to these kinds of situations. And so I think, to Hope and Andrew's point, to not make this a fear-mongering type presentation, the hope is that if you're living somewhere, or if you own property somewhere, you take a little investment with respect to the community, and try to work to put these things in place so that when bad things do happen, which unfortunately they do, you don't end up in 3 years worth of litigation over a hurricane chaser who showed up after the fact. And I think the global tale there is, as the PowerPoints say here, is, knowing your agent, and not just your agent, but knowing your community, and letting that work with you as opposed to against you.
And my summary, we'll move on from this, is don't sign a 2-page contract for $14 million worth of work. Yeah, that's best legal advice that I can give you there. So often, and this really gets into maybe more run-of-the-mill disasters that you see in your communities. Let's say there's not a hurricane. Let's say there's a water, my favorite, water heater bursts, and there's a flood. There's a water damage event in a condominium. as an attorney, and I know Andrew also will speak to this, but the very first thing that the board needs to understand is that there is a difference between an insurable event and a maintenance failure. And if there's a maintenance failure, insurance is not necessarily going to cover you for that event, but then you really need to delve into whose responsibility was it to maintain, or is it to repair whatever damage has occurred as a result of the event. And so I'm not going to get into, I'll give you again the example, water heater bursting, sudden occurrence, condominium, third floor, first and second floor owners get water damage. Third floor owner mops up a little water on the floor, but it was his hot water heater that burst. I cannot tell you in 30 years how many boards have come to me and said, well, we want to make the third floor owner pay for all of it because it was his fault. An insurable event is not necessarily fault driven. It's an sudden and unexpected occurrence. So the board's response does not need to be, who can we blame? The board's response needs to be, who's responsible for the repair? And your covenants are going to dictate that, and your insurance policy is going to dictate that. I'm not going to delve too far into this, except to say, don't fall into that trap of thinking that your job as a board member is to place blame and avoid filing a claim. In most cases, if your insurance covers it, you have an obligation under your declaration of covenants to file the claim. And filing the claim is not necessarily going to drive up your premiums. It's the loss runs that drive up the premium. So if there's a claim filed and the damage falls below the deductible amount and the insurance company never pays a dime, Andrew, back me up on this because I give this advice a lot. Don't not file the claim because you're afraid your premiums are going to go up. File the claim, then you have the proof to hand to the owner that this is on you because it doesn't meet the deductible amount. And then we can deal with, we're going to talk later about deductible costs and so forth. Andrew, what would you say about that?
I would say that placing one claim in a 12-month period and it's under the deductible, that will not affect the insurance renewal very much. But it is still a claim on the loss runs, and it will stay on the loss runs for 5 years.
Even if there's no payment as a result of that claim.
Even if there's no payment off. And this is one of the things, we're getting away from hurricanes and natural disasters, which is totally fine. We always want every association to have a process that if there is a claim, what do they do? Well, the very first thing they should do is A, call the manager. B, if an attorney needs to get involved, you call them second. Third, you call your agent and talk to your agent in regards to the claim. Make a determination if the claim is going to be made. You hand it off to the agent, let them place it. If a claim is not going to be placed at that moment and you need to gather more information in regards to the amount of the claim, go ahead and do that. But I would absolutely side on placing the claim is way better for the association, because if you don't place the claim now and the water damage arises again in the future, the insurance company, because they've not issued a reservation of rights, may not have to cover that damage because you didn't give them the chance to investigate.
And there are also notice provisions that you have an obligation under your policy to notify the insurance company of an adverse event or a potential claim. And so even if you don't file a claim, sometimes I get into a wrestling match with an agent over this. And I don't know, Andrew, whether you and I have never talked about this specifically, but the law, as a lawyer, I'm going to tell you, put your insurance company on notice so that they can't later claim even if you don't file a claim, I've written lots of notice letters.
Yes.
Because what if the damage turns out to be, you think it's $3,800 and it turns out to be $25,000?
That's right. In property, you have you have to report it in a reasonably timely manner. When it comes to directors and officers insurance, the time starts ticking. You have 60 or 90 days, and then the insurance company will not cover that claim. So the placing the claim is absolutely of the utmost importance.
So Andrew, we've talked some about, we talked a lot about replacement coverage. You talked about wind-driven rain and making sure that's an exclusion on every policy. So you want to pay attention to that. Tell us what you mean here about debris and a little more specific about ordinance or law coverage.
Sure. Debris is very important because let's say there's damage to a building from a hurricane in our example here, and there's damage, debris from the building is covered for the removal up to 25% of the policy for the removal. The problem is that let's say there's a condominium next door, it has damage, but its debris has landed on your property. Well, that is not a covered event. That is something that the association will be paying for out of their pocket. So with storm damage, just know that your building debris is paid for and covered. Debris blown in from next door is not. And any trees that are not hitting covered property are not covered either, unless they are blocking entrance ways, roads, where it's part of an emergency to remove them.
Or they land on the building.
They land on the building. Absolutely. Absolutely.
I also give a lot of fallen tree opinions.
Yes. And that's North Carolina is those laws are, I shouldn't even talk about this. Nute, you talk about this. I'm not practicing law.
Well,
in regards to trees.
Well, I think Hope is the fallen tree expert, and I'll defer.
Well, we're not going to get, we just
Sorry.
summed it up, and we don't have time to go down that rabbit hole. But yes, if the tree falls on the building, even if it's a tree that the roots are on your neighbor's property, the
That's
building owner is insured for it, and you can't put it back on the. So by
South Carolina.
contrast, if the tree is on the common area and a storm comes along and blows the tree over and it falls on an owner's house, the association is not responsible for paying for the tree removal. So that's a little extra, a little bonus
Yeah, sorry about that.
for you in this presentation. But and we're talking here, just put this in the context of, what is covered and what might not be covered, because the next slide we're going to talk about how we pay for things that aren't covered. How does this ordinance or law coverage come into play in terms of extra costs that might not be covered?
The ordinance and laws is one of the most important of endorsements that need to be added to a policy. Innately, it's not a part of the policy, so you have to have it endorsed on. The ordinance or law coverage has 3 parts. The first 2 parts have everything to do when it's a partial destruction of a building. Not a full, but a partial destruction of the building. Coverage A has to deal with the undamaged portion of the building and making sure that it is not having more damage. It's got to be able to be worked on so it could be rebuilt without tearing it down. So that's the undamaged portion is part A. Well, part B is, we have a portion of the undamaged building, but now it's deemed that it has to be demolished. So B is demolished. This is where the undamaged portion of the building has to be removed. The debris and the demolition costs are covered under this section of the endorsement. Well, section 3, because it's A, B, and C, C is the increased cost of construction to bring it to today's building codes or standards. So if your building was built 30 or 40 years ago, there's many building code changes that when it gets rebuilt adds to the cost that is not part of the original insurance because there's a replacement cost. The extra cost of bringing it up to code to today's standards is where it gets paid for out of this section of the insurance policy.
So this is a great cautionary tale about what to make sure you do have covered. I will tell you the flip side of this is that every additional rider and every endorsement that you have to cover these exclusions is going to increase your premium. But that's the reason for having insurance.
My one piece of advice of that is this: ask for the most amount of the ordinance or law coverage that you can get, then make a business decision if you can afford it or not.
Yeah.
But that is the only way, is asking your agent for that information.
And then, of course, you are always going to have a deductible that is going to, how does that get treated and how are we going to cover that if it's not covered as an association? So in a condominium, I'm going to speed us up so that we get to the questions by 5:30. How do the owner's individual policies come into play? The tree example I gave you is a great example. If you're in a single family detached community, what is covered on common area versus what is covered by individual owners policies is important to not make assumptions about, and to consult your attorney about, and to consult your agent about, because you don't want to drive up the association's cost by volunteering to cover something that the individual owner's policy would otherwise cover. And it's your fiduciary responsibility as board members to keep in mind what is best for the association. Again, your fiduciary obligation is to the corporation and the corporation's premiums and the corporation's longevity of being able to stay in that standard market, not get thrown into only getting your policy non-renewed or being in the excess market. So it is important to understand what individual coverages are in place. In a condominium, there is a specific synergy between, and this is true in South Carolina and North Carolina, because these insurance forms are written on a national standard form. Am I right about that, Andrew?
Yes.
The HO6 and the master condominium policies. And the HO6 policy for individual condominium unit is designed to work with the master condominium policy, and there are coverages under that specifically are designed to cover a deductible, for example. Well, guess what? If your covenants don't help you, and this is particularly true in South Carolina because you don't have a condominium act that says this is how the deductible is treated in this way, in the absence of other direction. I have drafted many amendments to make it clear that the deductible can be charged against in proportion to the units that are benefited by the repair or those that suffered the damage because of the casualty. And we do have a statute in North Carolina that validates that, but Nute, if that amendment, if association was to enact that amendment in South Carolina, I am guessing that in the absence of a statute that validates it, it would be valid simply because it's the law of contract.
Yeah, and that's exactly right, Hope. And in South Carolina, it's generally treated as a contract or with respect to the covenant. So it would be treated as a covenant on the land or under contract law principles. So as long as it wasn't otherwise unconscionable, which would certainly not be the case here, it would be valid.
But of course, when you've done everything you can to be proactive and to get that extra individual owner's insurance, the point of this slide really is to think ahead, and how can we do everything to get the maximum coverage working for us on the individual policy as well as on our association property policy. But inevitably, you might come up, for any of the reasons on the previous slide, with the need for a special assessment. And of course, I'm just going to briefly go over that there is no statute in North Carolina or South Carolina that provides for a special assessment. Special assessment is entirely an availability as a creature of your declaration. That's true in condominiums or in planned communities. And so it is very, very, very important that you look at, I can't give you a one size fits all advice on how to pass a special assessment, because it's going to be unique. And I know my clients hate it when I say, I'm going to have to read the declaration because it really is unique. I gave some advice this morning for a community that did not have any special assessment provision in its covenants, but we were able to craft essentially the same vehicle by enacting a temporary extraordinary increase in the annual assessments, put a 3-year limit on it. And it's all about how you advertise it to the owners, what the owners know they're voting for, and what the limitations the board puts on it. So that's what I'm going to say about the special assessment. And of course, the other thing I would say in this particular context of disasters is before you, it would really behoove you to nail down your costs, go through your claim, go through this evaluation of deductibles and individual policies and what the association is going to be responsible for. Because the worst thing you can do is to go out for a special assessment and then realize, you know what, we're $150,000 short, and have to come back for another special assessment. And you really, at that point, I have seen this happen, are in danger of the owners being so fed up with you that you what if you don't get the vote on the second assessment? So that's just a piece of advice of really doing your due diligence, not going out too soon for the special assessment, and understanding what those total costs are going to be before you do that. Anybody else on Nute, anything to add on special assessment?
No, I think in South Carolina, another important distinction to remember is the lack, particularly in single family lots, is the lack of collection enforcement availability. So it's much more contract based. So the community investment in that respect is much more important. I mean, you don't want to be chasing 14, 15 individual rejectors because they decided not to pay it when you don't have lien rights and the other things that exist in North Carolina that just aren't there statutorily in South Carolina.
Nute, run us through. I know you've had some specific. Andrew has told us the importance of ordinance or law coverage, but run us through quickly.
Yeah.
These building code concerns.
Sure. Very, very quickly. And I think the first thing to say is the ordinance and law. This is where ordinance and law really becomes important, because the building code, and I say, what is the building code? Because a lot of clients come to us and they say, our code enforcement official, whoever that may be, has said, we can't build this way, or we can't rebuild this way, or, you know, the clubhouse a tree fell in the clubhouse and they're telling us we have to replace this. Tell me why the building code says that. The building code is not a body of law the way statutes and other provisions are. It is actually a provisional set of rules really put out in North Carolina by the Building Code Council, and in South Carolina by the South Carolina Building Code Council. And that council is made up of political appointees from different professions, engineers, architects, contractors. And those folks, along with other stakeholders, weigh in annually or semi-annually, depending on the state, to develop the building code. And those people are responsible for it. So what it actually is in North Carolina in particular is it's 11 different sets of codes that range from fire, waste treatment, new existing building code, new structures, those kinds of things. And so there's no one building code. There are a set of codes that are enacted by this council. And if you want to go to the next slide, I can probably roll it right in there. So thinking about the building code in a loss situation, from a new structure, it's pretty easy. You apply the new structure code and to go through a conventional review process. But when there's a loss, particularly in a condominium situation, you need to think about the character of the structure itself. And by that, I mean, is this a mixed use building? Is this multi-occupancy? Are these single family? Is this a commercial building? And, I'm thinking of some very specific examples, Hope, where we've had clients who've had maintenance facilities that have been damaged or that have fallen under disrepair. So those, the building code provisions that apply to those kinds of structures are different than the other things. And so the second thing you need to look at is what is the extent of the loss? And in North Carolina in particular, South Carolina, literally just this year has enacted a whole new building code with some very substantive revisions that I was able to review partially in preparation for this presentation that frankly changed some of these particularities with respect to South Carolina, but the general advice is still the same. There are more or less 3 levels of repair. And so the extent of the loss and the scope of work that needs to be done will generally dictate what provisions of the code are applicable, which will ultimately dictate the cost to the association. So, for example, if you had we had a condominium client a few weeks ago call me and say, we had a pipe burst on our fire sprinkler system. The fire marshal came in and said, we've got to replace the whole system in the whole building, even though it was just this one little part. Our condo was built in the 80s. That seems outrageous to us. Well, unfortunately for the association, the fire marshal's right. There is one provision under normal circumstances. If it were something else, this would just be a repair at a level 1 or lower level, which would not require you to bring it to the most strict standard. But there's an exception in the North Carolina Building Code that says fire suppression systems in mixed use buildings need to be the most restrictive means. So you have to bring it up to current if that happens. There are other exceptions with separate, it's called a separation exception, where if you have separate buildings or separate facilities or there's a firewall in place, you can get some exemptions, which hopefully will tie into the next slide there, Hope, if you want to bump us forward. And so that's where we talk about navigating the building code players. And to kind of bring it all back around, this goes back to the community aspect of the community association law. Have a good contractor who knows what they're doing. In both North and South Carolina, there are licensure requirements that limit the kind of work with respect to dollar amount value a contractor can do. Make sure you've got someone who's got the right licensure. And moreover, the market is pretty good at fleshing out particularities with respect to types of work. So don't hire a carpenter to do some kind of metal work or glass work. Find someone who specializes and has a good reputation in doing that kind of work. Work with the code official on the job. This goes back to having a good contractor. Good contractor is going to have a good relationship with the code official, and they're going to know what kinds of things need to be in place. And hopefully you don't have to pick up the phone and call your lawyer about an argument over the fire code if you've got a good contractor there.
And I'll also say, Nute, there that the manager is a key player with the code official, with meeting, sometimes you want your own advocate, your community manager, to be there when the contractor meets the inspector, the local inspector on site. Because the community manager might know something that the contractor doesn't. The community manager is also going to be able to relay that firsthand to the board if there's some decision made. And so that's, to me, when you say the code official is your friend, that means have somebody there meeting with that code official.
Yeah, absolutely. And then, the next part of that is there are going to be disagreements, as in the example that I mentioned. And when those happen, it's really critical. In my experience, the most efficient resolutions to these things happen before there's a formal appeal. So in North Carolina in particular, most of the heaviest code enforcement concerns that we see happen in the larger municipalities, Raleigh and Charlotte. Charlotte in particular has a very formulaic way in which they handle these kinds of things. And so having your designer or your engineer communicate with the code enforcement official as the process is happening, in conjunction, hope with, as you said, the property manager, so that these things can be worked out pre-appeal. But if the code enforcement official issues, a final resolution on something that the board or the association, the client, is ultimately not happy with, there is an appeal process. And this is both North Carolina and South Carolina. There are some distinctions in the vocabulary, but effectively the process is the same. The most local level at which the code enforcement is being applied, in South Carolina, that's city or county. And in North Carolina, it's city or county, depending on where you're at. And then up to the county or eventually to the state. And you can have, in North Carolina, the Department of Insurance can override you, particularly with fire marshal concerns. But then ultimately, if you're still not happy, your final appeal is through a judicial matter. And of course, we want to keep these things out of court, but there are processes by which you can challenge code enforcement provisions through, in North Carolina, the Superior Court, and in South Carolina, the Court of Common Pleas. And those are generally fall into either constitutional concerns, which are pretty broadly speaking, or they're more or less injunctive relief with respect to a code enforcement problem.
So a summary I would say about all of that is it better be a pretty big problem.
Yeah, I mean, I would say
expensive problem before you get to that point that it would make it worth your while to argue that, because at the end of the day, what you're arguing for is we want our building to be restored at what's been determined to be an unsafe building code.
Yeah,
that's a real tough sell to your owners. Yeah,
and for that reason, there's not a whole lot of case law out there on these, but typically it's a bet the bank kind of case, right? I mean, we either get this provision or we have to abandon the project, and then you have to have a lot, some more tough conversations.
Well, Ben, we tried to end right at 5:30. What questions do you have?
Excellent. Well, thank you very much. A couple of questions. One question I had, Andrew, a named storm versus a non-named storm. Is that treated any differently in the insurance world?
What an awesome question that is. Heck yeah, that comes down to the deductible. When the difference is wind and hail is a non-named storm deductible, when it will say explicitly named storm deductible with 1%. That would cover a hailstorm and windstorm without that. But if Hurricane Florence came through and caused the damage, that is a named storm. So it would be clearly different on how.
And is that defined in the exclusion section of the?
It should be right on the declaration page, right on the first page should tell you exactly. It'll be in two ways. It'll be explicitly written, or it'll say, please, in bold letters, look at the deductibles. There are different deductibles for the different types of properties. Because if there's one deductible, they don't do that disclosure. If there's multiple deductibles on the property, they will do that, and you'll have to you may have to go find it, but it's not too hard.
Okay.
Insurance, of course.
Another question that's come in. So roof damage, we had an ice storm in Charlotte this past year. Would that be covered by insurance if there was leaking into the building?
Well, tell me because there's got to be physical damage to the roof. What damage did the ice cause?
And I don't have that information.
Well, here's with ice and snow, the weight of ice and snow, and it causes a collapse, is covered. But let's say there's North Carolina, we always are famous for getting a 12-inch snow. It's only around for a few days, but as it melts and it leaks into the house and causes water damage inside, that is a maintenance issue. Because roofs are designed to cover or sustain prolonged water damage.
What a great question.
So I'll say the next part to that question was, if drywall is damaged or ceiling drywall or walls are damaged, is that, whose responsibility to repair if it is we'll say if it's insurable and if it's a maintenance issue?
I'll take the first part.
I was wondering if Andrew was going to step on that.
Oh, come on now. It's not my first day. There has to be physical damage done to the roof that has allowed water to penetrate. That now is an insurable event.
And I'm going to take the legal part of that. If you're in a condo and you have an insurable event under a master policy, that master policy is going to cover both the damage to the roof and the damage to the drywall. That's an insurable, as Andrew said, you first got to decide if it's an insurable event. If you are in a townhome, and I saw on the Q&A that somebody had a question about townhomes where the association is only responsible for maintenance and repair of the roof, and each individual owner is responsible to carry their own homeowner's insurance on their structure. Even if it's an insurable event for the association, or whether it's not an insurable event for the association, the fact that the damage came from the roof and there's no damage to the roof, but you've got drywall damage inside because there was a leak, you'd never complain to the Nute, you just litigated this case, never complained about there being a leak, no evidence of a prior leak. That's going to be on the townhome owner's insurance or individual coverage to pay for that drywall damage. So it really depends on townhome versus condo and whether you have that master policy.
Okay.
And as Andrew says, whether it's an insurable event.
Okay. Andrew, can you define the difference between the standard market and the excess market in North Carolina?
Sure. More in regards to the standard market, they have to follow subjected to rates and file rates with the insurance commission. And they also have to file or follow certain forms. Every policy there is insurance forms. The CG 001 is the first one that's in there, and it's standard and has to be followed by a standard market. Excess markets can charge any rates, and they offer coverages based on what they're offering, not by state regulation. And so it is the higher risk market. Whatever a standard market can't take goes to excess markets.
Andrew, are there similar consumer protections in South Carolina?
Yes.
With regard to standard versus excess?
Yes.
Okay. Another question. Can an HOA require an owner to carry an HO6 policy? And I'm going to guess this is maybe a condominium but potentially a townhome. So
if your townhome has a condo policy, condo style insurance, it would behoove townhome owners to have HO6 policies, and you can require that if your covenants require it. So if your covenants don't require it, you need to be talking about an amendment to require that. But it is not required under statute.
And again, an HO6 policy is an articles policy that covers property inside the unit, right, Andrew?
Well, that's a great question. When you have all of the different forms, everybody's heard of an HO6. It's basically designed as a condominium policy. You have an HO3 policy is designed for single family. You have an HE7, which is a even more advanced type of single family dwelling type of policy. They all use the same exact A, B, C, D, E, F, G, H coverages. Everyone does. But the HO6 policy is truly designed for condominiums that has the coverages that it needs. No matter what, when it says dwelling A property coverage, it never states that it only is covering the cork flooring and for the flooring or the oak cabinetry. It is a blanket amount of property coverage that unit owner has for their availability.
Let me expand on that, Ben, because when I said earlier in the presentation that the HO6 is designed to work for the individual in conjunction with the master policy, the HO6 does more than contents coverage. That Schedule A is going to provide you with deductible coverage if the association has the ability to charge the deductible back against the individual owner. There is also a provision in the HO6 for loss assessment coverage. So if the association has to levy a special assessment to repair damage is not to repair damage, Andrew?
It is not.
What does the loss assessment do?
There is no coverage on insurance for special assessments for property coverage. Okay. The special assessment it's why it's very inexpensive on every HO6 policy. The special assessment is designed that if there is let's say there's a large lawsuit at the association and it exceeds the insurance provided by the association, the excess over the amount of insurance would be divided equally by all of the homeowners. And now there's a loss assessment. The loss from the lawsuit is assessed to the unit owners evenly. They can put a loss assessment claim on their HO6 or even their HO3 if it's a single family community. It could happen there also.
And that's getting technical, but I wanted to be clear, Ben, that an HO6 does more than property contents.
That's right.
Okay. So we may have answered this one before, but our townhome association has 72 units spread over 12 buildings. Per our covenants, the HOA only covers exterior maintenance of the buildings. And so every homeowner has regular homeowner's insurance and HO3 ? This seems really unworkable in a disaster. What do you think? And I have opinions on that too.
Well, I know. I cannot wait to hear what the round robin of opinions is on this, but I'll just state my preference because I have litigated the one townhome building in the middle of a community burns and everybody had their own individual coverage and it was a nightmare to get it rebuilt. And it was an older townhome. And many of those units didn't have mortgages, and so they just didn't let their insurance lapse. It was a nightmare. I am a big proponent of townhome communities purchasing condo style insurance and amending your covenants to require that. I'll toss it to somebody else. They may have a different opinion.
Excellent. And now remember, I'm an insurance agent and I get paid a lot more money when I write these big master policies. In a townhome community, I would recommend the opposite. And the only reason why is I know that the negatives, multiple adjusters, problems with roofs, all of that. The maintenance section of the governance has nothing to do with the insurance section, and never do they intersect. So if there is physical damage to a unit or multiple units, the whole 5-unit building burns down, the 5 unit owners are the ones that are responsible with their insurance. If it's a master policy, and as these buildings age, there are going to the increased risk of claims. It's going to drive that master policy out of skyrocketing price as it gets older. Anything over 20 years, 30 years, it's going to become uninsurable. You have ticking time bombs with the hot water tanks that you mentioned before. You're going to have plumbing leaks. I have a good friend that says time is undefeated. And this is something that I think that for the longevity of a townhome community as it ages, it is better to have the insurance responsibility on the individual unit owners. So
Ben, we're dying to know your opinion.
Well, I have multiple opinions, but I think for smaller claims or smaller issues, when it's on the individual owner, it is far easier to manage those because you can point it directly back to the owner. For larger issues where you do have a fire in the middle of the building or a roof line that all intersects and you have a hailstorm, it's far easier to manage a large project like that when it is a master policy versus individual policies.
A clear and concise fire is indisputable. You can see it, you can smell it, everything. Hail is a massive problem. And that's we should have a whole separate presentation in regards to that.
So, well, last question. How is coinsurance penalty treated during these times of uncertainty with materials, labor, supply chain issues could drop your replacement coverage below the 80% threshold at the time of the claim, but it was sufficient at the time of renewal?
There's $1 million question right there. That is absolutely, here's the answer, is that it is at the time and date of the claim, of the accident, of the physical damage, the sudden accidental accident is when they will take the replacement cost. So to answer that question is if it is under that 80% co-insurance clause, that association will pay a penalty. They do have a duty throughout the year. You can change those and raise those adjustments. A technical part of that is that in every policy, there is a cost of living adjustment. It could be 3%, 4, 5, 6, 7, 8%. That is actually at time of claim, it is also calculated on a daily basis. So that actually helps the association a few percentage points also. But just be wary of that. But if you fall under that 80% at time of claim, you will pay the co-insurance penalty to the insurance company.
So sounds like the recommendation is if we have storms brewing in the Atlantic, everyone needs to be looking at their replacement cost and kind of the schedule.
Well, there isn't any reason or any time frame for you not to meet with your agent. If you feel that it's even close to that, well, then you have a problem already.
I just gave this advice to a client this week, Ben. Their policy is today's the 19th, right? The policy renews today. And the board, unfortunately, had not remembered my advice last year to look way ahead and let's figure this out, in January. And I said to the board, look, we still can get the agent renew, keep your insurance in effect, but it doesn't matter that it's 1 month later. We can change the coverage. We can still look at these things, and that would be a great takeaway from today.
Yeah, better to have insurance than not. So
yeah, don't let it lapse. but don't say, oh, we don't have to worry about this again till next May.
Okay.
All right.
Well, excellent. Thank you all for your time. Great information. Thank you all for participating today. For those of you that are still with us. So as a reminder, it is recorded and it will be placed on the camsmgt.com website. So we do hope you will check out this recording and other recordings and hope that you share this information with your other board members. So Thank you again and good night.
Thank you, everybody.
And good
Thank you.
night.
Appreciate it.
Bye-bye.